Assalamualaikum warahmatullahi wabarakatuh. Uh, this is a short presentation from me and my group. So our group mini research is about quantitative study of gold prices or changes in gold prices impact on return of ESG gold mining companies index. So my group mate is consists of Ahmad Muslihuddin, me myself Muhammad Hakimi, and also brother Hassan. So just a brief introduction on our topic. What our research is basically interested to see how gold mining companies are sensitive to gold prices. This is based on our reading because when it comes to gold mining companies, their primary product and revenue are gold itself. So logically and academically, gold prices do have an impact on the performance of gold mining companies. This is because the price volatility of the gold directly impacts the company's profitability and also stock performance. Uh, if we talk about theoretically, when there is a rise in gold prices, of course, the gold mining companies have high profitability and also increased stock value. When the gold price is going down, then the profit margin of the company will be tighter or smaller. They will narrow down, and also they will have negative stock performance. This is also influenced by investor sentiment. So our research objective and question is basically we are very interested to investigate the relationship between gold prices and ESG focused gold mining companies index performance. One of the key things that we want to address, the question that came to our mind is there a correlation between gold prices and ESG index performance? Second, can gold prices predict ESG index performance? And lastly, what's the best equation to describe this relationship? So, in the interest of our research, this is how we collect our data. We use the historical gold prices and also the historical data from the selective out ESG Gold Mining Index NTR from June 2021 until December 2024. This data is obtained from investing.com, and how we decide is we use a weekly data to obtain a sample size that is bigger than 50 so that our findings are reliable. By applying this, we are actually applying systematic random sampling, and our analysis approach is we use the normality test for the data and also regression analysis to test the predictive power and correlation in our research. So for the regression equation, it's basically ESG index equals to beta naught plus beta 1, the gold price plus E. Okay.
Okay, Assalamualaikum. And, salam sejahtera. My name is Ahmad Muslihuddin bin Roslan. I will continue the presentation for the hypothesis and normality test that had been done via SPSS software. So basically, we established two key hypotheses to examine the relationship between gold prices and the ESG Gold Mining Index. So the correlation hypothesis is the first null hypothesis is no significant correlation between gold prices and ESG Gold Mining Index. And the alternate hypothesis for the first one is significant, there is significant correlation that exists. And the second hypothesis, the null is gold prices changes does not predict ESG gold mining index performance. And my alternate hypothesis for this is gold price changes significantly predict ESG gold mining index performance. And before testing this hypothesis, we access the data normality. So there is a key assumption, basically a key assumption for many statistical tests. And what we had found regarding to the normality test is, so the data follows a normal distribution. So this satisfies assumption for parametric test. But ESG gold mining index is not normally distributed. And how can we interpret this is basically the data deviates significantly from normality. So this suggests we may need non-parametric tests for data transformation. Now I will move to the my next presentation, which will touch on answering the first research question, which correlation between gold prices and ESG gold mining index. So we examine research question one, which is there a correlation between gold prices and the ESG gold mining index? So basically that is the first research questions. And we are using Pearson correlation, and we try to quantify this relationship between two variables. And the analysis reveal a strong positive correlation where the correlation is 0.797 and the p-value is at less than 0.001, which indicates that it is extremely significant. And this means that there is a direct relationship between gold prices and the ESG gold mining index, which means when gold prices rise, the ESG gold mining index also will systematically rise. Okay, now we will move to answering this question two, which can gold prices predict performance of ESG focused gold mining stock? So basically, we are trying to identify whether the gold prices will be a useful predictor to measuring the performance of ESG focused gold mining company. And we are using the linear regression modeling. So we are testing the dependent variable, which is the ESG gold mining index, and the independent variable, which is the gold prices. So what we have found that the gold prices are a strong predictor of ESG gold mining index performance, reinforcing existing research on gold mining stock sensitivity. So basically, our testing on the relationship between gold prices as a predictor with the ESG gold mining index performance is tally with the existing research that we had gone through before this. Okay, now we will answering the third research question. Basically, we try to identify what is the best equation for this two variable test. So the key finding for research question three is the first one, the best model shows a linear or positive relationship between gold prices and the ESG index. And what we can interpret for this, or how can we explain this in more simpler word, is for every 1% increase in gold prices, the ESG index will rise by 1.954%. So basically this confirm and this shows a strong direct correlation between gold price movement and the ESG index performance. However, I would like to add one additional info into a broader context, which the trend aligns with the commodity-driven sector dynamic, suggesting that ESG investment is resources sensitive industry respond actively to the gold market shift. Okay, now we will move to the conclusions of this test. So there are three key findings of this test. The first one is strong positive correlations between gold prices and ESG index. And the second one is 63.3% of ESG index variance explained or affected by gold price changes. And the third one is there is a linear relationship whereby a 1% increase in gold prices will result into 1.954% rise in ESG index performance. So based on these three key findings, we will present the two main implications, which the first one is gold prices, a robust predictor for ESG focused mining investment strategies. And the second one is ESG focused gold mining stock are highly sensitive to gold price fluctuation. That's all. Thank you.